Welcome, everyone, to our discussion on Bidvest's half-year financial performance, which really gives us so much to chew on in terms of operational dynamics and strategic acquisitions.
Yeah, it's a fascinating blend of growth and challenges. Absolutely. We see revenue growing by about 5.7% to R64.5 billion. Yet trading profit stayed flat at roughly R6.3 billion, right?
Correct. And that's interesting because despite the revenue uplift, the trading profit margin dipped slightly, down to 9.7%, hinting at some margin pressures, especially in segments like commercial products and freight, where external factors really played a role.
Yep, that margin squeeze is a key point. I also caught that cost management was outstanding. Operating expenses were well managed, even though there was a mix of organic and acquisitive growth. It seems they controlled overtime and kept payroll inflation in check, right?
Exactly, and that's what helped them maintain profitability across most divisions. Notably, services like Services International and branded products reported strong trading profit growth, even when challenging segments like Adcock Ingram and the impact from renewable energy sales hit the overall numbers.
Yeah, that's a solid point. Speaking of divisions, the acquisitions really caught my eye. They closed 6 bolt-on acquisitions like Decra, Serco, Spec Systems, NextGen, Countrywide, and WearCheck, which seem to bolster their product and service offerings. That diversification, would you agree, really adds scale and strategic depth?
Totally. It's like they're stacking their deck with specialized assets. Each acquisition not only enhances their market footprint, especially internationally, but also helps smooth out the volatility in some of their legacy segments.
Indeed, diversification is key these days. But, I wonder, wouldn't you say that the flat trading profit suggests their cost headwinds like falling maize exports and competition are offsetting the gains from revenue growth and acquisitions?
That's a fair challenge. The report shows heavier headwinds in, for instance, freight with no maize exports and lower commodity volumes, which really did impact margins. Yet, the strong cash generation, a jump from 33.4% to 44.8% in cash conversion, demonstrates operational resilience.
Yeah, that's an intriguing balancing act. And then there's the capital structure. Their net debt increased a bit by R5.7 billion, but the net debt EBITDA ratio remained stable at 2.0x. They also managed to refinance domestic bonds for longer tenures, strategy resembling proactive debt management.
Right? And that, along with the average funding cost rising only slightly from 6.5% to 6.9%, shows they're handling their financing risks well, even while expanding.
Definitely, it's a delicate balance maintaining liquidity and growth simultaneously. Not to forget the strategic exit from the banking sector with Bidvest Bank, Fin Global, and Bidvest Life being listed as discontinued operations. It's a big move for focusing on core competencies.
Yes, and the disposal process seems to be progressing, with signed offers on the table that provide both financial and strategic benefits. This divestment is also key to redirecting resources into growth initiatives like the new fuel tanks and innovation-driven projects.
Absolutely. Refocusing can unleash more concentrated growth. I'm also impressed by the social and environmental focus in their outlook. They're investing almost R0.5 billion in enterprise, skills development, and CSI quantities that match previous fiscal year spends. Talk about commitment to sustainable performance.
Definitely, it underscores that they view people and sustainability as crucial assets. Plus, the emphasis on BBB and internal succession planning suggests they're building capacity from within, ensuring long-term resilience.
It's a holistic approach. So wrapping it up, the report reflects a company navigating both growth and headwinds by diversifying across sectors, managing costs cleverly, and strategically repositioning its portfolio. Is that a fair summary?
I'd say so. Despite some unexpected underperformers, the overall picture is one of steady revenue growth, robust cash generation, and proactive strategic measures, all of which are geared towards turning ordinary companies into extraordinary
really
performers.
Insightful, right? Absolutely. Thanks for breaking that down. It'll be interesting to see how these strategic moves play out in the coming financial year.
Indeed. That's all for our take on Bidvest's interim results. Until next time, keep questioning and stay curious.